You can hear the sound. Okay, here we go. Ready? Go. Welcome. You're listening to the best of investing on Talk 910. You know our show. It's where we present valuable information about real estate, the financial markets, and other economic business of the day. And for those of you listening for the first time, here's our format. A few people sitting around a bar having drinks without the drinks, talking business with you, the audience listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Julie Kennedy of Marin Modern Real Estate. Our phone number is 888-912-1190. Write that number down, 888-912-1190, because you're going to use that number to answer the trivia question for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. Now, the vacations are not sponsored by the radio station, but by Lighthouse Resort and Marina, which is located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is prison movies. We're going to have fun with that. Okay, our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television, Comcast Channel 26 and AT&T Channel 99 on Saturdays at noon and Sundays at 6 p.m. And let's get right into it because Halloween is coming up pretty soon here. Julie, you want to share with us about haunted houses?
Well, I'd love to share about
haunted houses. I love haunted houses. Not living in one, but I love visiting them. Go ahead.
Well, I've always been a great lover of particularly the San Francisco architecture. And as a child, there was a particular home that was rumored to be haunted in the Cow Hollow area called the Alien House. So as a little girl, when they were demolishing it, I took a piece of the I guess it's called some kind of scallop work as kind of a talisman. And that's carried me through to my interest in haunted houses. So just wanted to share that there on my website, I will have a link to all the haunted houses I can find in the Bay Area.
Oh, cool.
But specifically,
That's great.
there is one here in Marin County. It's the Boyd Gatehouse. It's next to what is now the Elks Club. And they had so much, it's now the Marin History Museum, but the employees there and former residents experienced lots of paranormal activity to the point where they actually had paranormal investigators come into the house in order to measure this.
Did they have ghost hunters show up?
Yeah, who are you going to call, right? So if any of you out there think that you might have some paranormal in your house as we head towards Halloween, there are people that can come out and verify that for you.
So give us examples of the paranormal. I mean, door slamming.
Yeah, a woman singing. That's what's happening at the Boyd House.
How about my wife saying, Edward, take out the garbage?
Well, that could happen too.
That could happen.
Yeah.
That's scary.
Yeah. So now, because I'm thinking, okay, if I'm the audience listening in and I wanted to hear more about these haunted houses, you said you got a blog?
I do.
Okay.
I'm going to put it, it'll be on our blog, which is, you can go to www.nestinmarin.com and find out all about haunted houses in the Bay Area.
And remember, that's blog, not blob. As in haunted house and blob.
Nestinmarin.com. Okay.
Yes.
Kind of fun. I like that little nest in Marin.
Yes.
Mark, do you have a little something to share with us?
Of course, absolutely. Why would I be here?
Yeah.
So, one of the more popular real estate blogs is formerly called foreclosureradar.com, now called propertyradar.com. In fact, Sean O'Toole is a fairly avid speaker around real estate events and real estate related events in California.
And he's been a guest on our show.
That's right. He's been a guest on our show. And so his report, talking about, or basically, the news about the news on their website, and we had the September data came out, and so for the second consecutive month, September sales and median prices both fell in California, and they're attributing that as to a rise in mortgage rates.
Yep.
And the dearth, really, of foreclosures. Foreclosures have gone way down. And in fact, what's interesting, and Sean pointed this out, you would think by the headlines about how foreclosures are plummeting that we've basically gone through that cycle of foreclosures as a result of the market downturn. One would think, right? But that's actually not true. In fact,
why is that?
He points out that despite all the foreclosures to date, which are around over a million in California alone, and these are from short sales, loan mods, refis, etc. There's still over 1.5 million homeowners who remain underwater, and so that's he points out that's only a bit more than 50% lower than where we were when we started 5 years ago. So there's still, as much as there's been in some opinions, a recovery in real estate. In fact, there has been. I mean, there's been some of it we've talked about in prior shows. I've called it the rubber band effect of prices dipping below replacement cost in many markets, which is just not economically sustainable. At some point, they at least have to go up. And so we've seen in some markets in the Bay Area pricing go up from the bottom as high as, year over year, actually, 20, 25%. And a lot of that has to do with just prices going artificially low. And so notwithstanding that growth and now the seeming lack of foreclosure activity, there really are still quite a few homeowners underwater. These are homeowners that have continued to make their payments, that oftentimes it's their primary residence, and so they want to continue making their payments. I think a lot of the rental real estate, for the most part, that is or was underwater, a lot of that is gone. Although I do know, I know specifically people who have held on to homes through all of these years, thinking that the market would recover sooner, and yet they're still underwater on rental property, and yet they have chosen to suck it up and keep making those payments, and even though hoping that recovery is underway and that maybe next year in 14 will look like 13, and that you will have another double-digit increase in pricing.
Well, it's also probably they're emotionally involved, and it's kind of hard to walk away, especially if you've been making those payments all the time.
Yeah. But if you're a real estate investor out there and you think that you've kind of missed the opportunity, I don't think that that's true. I think there will continue to be opportunities to acquire property via short sale and foreclosure and other opportunities, particularly if you're out there, looking for people who are underwater and looking for an opportunity out from under that situation. A lot of our borrower clients at Pacific Private Money are really astute at finding purchase opportunities out there and still buying properties at a good price. It's just that the MLS, if you're buying off the MLS, that's really tough right now. There's a lot of competition out there. Still, yeah. There's still, although that's waning too. So again, maybe we'll get into a little bit of that.
Yeah, Julie would know the answer to that one.
Yeah.
Tell you what, we're going to take a quick commercial break here. Before we do, last week we had a special trivia contest where the winner was going to receive a beautiful 2-night stay at the Seal Cove Inn in Half Moon Bay. Relax, refresh, and rejuvenate. Treat yourself to the coastal casual pace of life at Seal Cove Inn, where you'll start your day with a wonderful farm-to-table 3-course breakfast and end it with a fireside glass of local wine paired with deliciously crafted small bites. Enjoy the beauty and culture of San Francisco or stroll around quaint Half Moon Bay. Just a short walk from the secluded hideaway to the many trails that take you through majestic forests of centuries-old pine and eucalyptus trees, your breath will be taken away by the view from the bluffs overlooking the magnificent Pacific Ocean and Moss Beach coast. Seal Cove Inn, at low tides, you can actually see the seals playing or lounging on the beach. That'd be kind of fun to see, wouldn't it? Check them out at sealcoveinn.com. Okay, and here was the question. Almost half of us won't do this for financial reasons. What? And the answer was attend a wedding. Now, hopefully this doesn't include the groom himself, but that was attending a wedding. And our winner was Francis in San Leandro. Congratulations, Francis. Okay, now we're going to cut to our first commercial break. Trivia. Here's the first trivia question. Again, the theme is prison movies. Which 1994 prison movie starred Tim Robbins as Andy Dufresne and Morgan Freeman as Red? The first 3 callers with the correct answer are going to win a free 3-day 2-night stay at the Lighthouse Resort. Their website is lighthouseforfun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Which 1994 prison movie, which is one of my favorite ones, starred Tim Robbins as Andy Dufresne and Morgan Freeman as Red? 912-1190. Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time, please. Don't touch that dial because when the best of investing comes right back, we've got some interesting emails where we're going to be asking Julie about staging a house, the pros and cons, and the one we have from Mark has to do with earning 8.5% interest on his fund. We'll be right back. Awesome. Good.
So the stats that you were quoting, is that California?
Yeah, I keep reading Sean's short, thing on here. He talks. He used one number that was California, and then another number that I'd have to go back. So I actually have other articles I've checked over time. It's depending on whether you're defining it as equaling underwater or
right?
using both the near underwater. The near underwater
Right,
plus
who bought
underwater
your
numbers are
equipment?
huge.
Right.
No.
But when you just get to underwater.
Yeah.
It's smaller. so,
Scott?
No, he didn't.
Because it's just
yeah.
crazy. There was an article in the Chronicle.
Good, I didn't have to yell at
He's
him.
a good editor,
On the
yeah,
block,
he's a good
I think.
editor, but he's really sloppy.
She
Yeah.
just had anecdotal 3 houses and
Those two go
varying
together?
sales starting
But
in
I get to use
96
his
to
camera
today,
when
so
I want.
There
including
you
some,
go.
some dips
So,
and rises. And these particular homes were at the high and above.
Yeah.
So it's so anecdotal. And
It
it's
is,
so
right.
regional, or
Yeah.
neighborhood.
So this is September 23rd.
Mike's missing.
Number of negative equity homes plunged to 1 million in the second quarter of 2013,
Killed him.
leading to over 50%. And then this article.
Do you still need
which is
this to,
part of it, is
chair?
also
Right.
from foreclosure. I'm sorry.
Are you gonna go back on the chair?
In August,
Probably.
29% or 2 million of California's 6.8 million mortgaged homes are underwater or barely above water. So
But it'd be
that's
interesting to
more
know if the barely above just happened, if they transition, obviously they transition that way as the housing prices.
You didn't see
right,
a little
right. So
silver,
if you're barely above, you might as well
little
be.
teeny thing.
Yeah.
Oh, right.
You
Okay.
can't, you're still stuck
found
at
it?
home.
Right, because you can't.
You have to
sell
go put it on here?
they-
Thank you.
yeah,
Yes,
they should-
okay. Think that'll fix it?
Sure hope so. Yes, it will. I'm not sure. That's good for Calvin and title too. I have my footprint on there. That's as good as any seal of it.
That's all right.
That's right.
Thank you, sir.
Now let's see what we got here. Hang on, Edward.
You ready? Okay, I wanna get this because Mark needs to get him out of here. Mr. Kramer, you ready?
No.
Yeah. Sorry. I usually wouldn't rush you,
I
but.
hope you're going somewhere fun.
It depends on how you define fun.
Okay, someone talk.
Okay, is it working now? What do you think? Mr. Kramer,
Yes,
is it working?
crank her on.
Crank her on?
Go get it.
All right, here we go. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Julie Kennedy of Marin Modern Real Estate. And when we cut to the first commercial break, we asked this trivia question. Again, the theme is prison movies. Which 1994 prison movie starred Tim Robbins as Andy Dufresne and Morgan Freeman as Red? Go ahead, Julie.
Was it Shawshank
Shawshank Redemption. Excellent. Great.
Worst name of a film ever, but one of the best films ever.
Yeah,
Yes.
yeah, very, very
Say
good.
that 10 times fast.
Okay, Julie, we got an email here that's right up your alley. Do you believe in spending money to stage a house? What are the pros and cons? That's a great question.
It is a great question, and it's one that we're faced with every time we get a listing. I think today's market, buyers are so used to walking into a home that resembles a shelter magazine, just everything done to the nines. And what you're creating there is an emotional attachment immediately to the house. You can envision yourself there, see yourself there, because it's like walking into a Pottery Barn showroom.
Versus just going into an empty shell and imagining your own
empty,
furniture.
yeah, and empty shells are really difficult, and even more difficult, a home that's cluttered and not staged and not spruced up at all.
Yeah.
So I would say for a seller, the first 2 weeks that the home is on the market, they should go take a vacation, have the house staged, put it on, and show it to its best ability. And we're also including not just the interior, but the curb appeal.
Okay.
And we have an expression in real estate, you only get one chance to make a first impression.
That's true.
And they won't come back if they don't like what they see at the curb.
And generally speaking, what have you found the prices to range? And I know obviously if you got a $15 million house, it's going to be
Right.
different than a $300,000 house.
Yes, and it really varies. I mean, there are stagers who will come in and work with your own furnishings, which is great. They'll show you what things to get rid of. They might bring in a few pillows and fluff it up, and that would be a flat fee, anywhere from $300 to $600.
That's really cheap.
Very reasonable
Yeah.
investment. Or you can go full tilt, clear your house out, and have one of the premier stagers bring in their furnishings.
Well, especially if you've already purchased the house and you need your furniture.
Right. Exactly. So then you're looking at, you could be spending $8,000-$10,000,
Yeah.
and then hopefully it'll sell right away. If it doesn't, then you've got some ongoing costs. It's not as high as your first.
Well,
shop.
and I've got to say that when we sold our house some years back, we bit the bullet and went ahead and did the staging. And the benefit that we saw was the fact that we believe that the house sold faster because of it. Because a stale house, the time value of money, it really is terrible.
It is.
No, absolutely right. In fact, when we buy fix and flip homes, which we're primarily we're lenders, but also I've worked with a few rehab clients, and we've done a few flips alongside them, and we've always staged the home. So, and so we like the East Bay because there's just some great markets, Oakland, Hayward, Castro Valley, that have a lot of entry-level homes, and so we've spent anywhere from $2,500 to $3,000 on average per home.
No Picasso paintings and
No, but these are nicely staged. I mean, it's not high end. I mean, we could spend $3,500 to $5,000 as well staging a 2,000 square foot home or a 1,500 square foot home. But again, there are some people out there that are there's price competition in there. But you're right, the homes sell faster when they're staged.
It's funny. I remember telling my wife that listen, you've got to trust the realtor and the stager who usually work together. And I said, we're not going to be living there anymore. So if they want to, if they think painting the house pink on the inside is going to sell, that's what you do.
Exactly.
And in fact, now you being the realtor, you're not the stager, or do you stage also?
Well, my partner Natalie Kemp and I have staged homes in the past to the point of even having a storage facility with furnishings in it. But we realized that we're realtors first, and stagers probably should be never. But that said, we will help a client who, if somebody's really pushed, you've got a seller who, has to get every single little penny out of the house and has no budget. We will help a client with staging. We'll bring in some.
Yeah, because if you're talented at it, that's the main key. And if you can save them some money,
Sure.
That's great.
So you're saying a homeowner who's had to move out of their house, now has it on the market, can negotiate with their realtor regarding the cost of the staging?
No. No. But what I'm saying is that when you sit down with a seller or potential client, you want to find out what their budget is, if they have a budget, and if they don't, you have to hear that, respect that. But if you want to list the house, let's be creative and find ways to make your house look appealing and presentable on a shoestring budget.
How do people get a hold of you if they're interested in talking more about staging and or obviously selling their house or buying a house?
Well, they can reach me. My email address is teamnest@nestinmarin.com, or they can phone me at 415-497-8584.
Okay, and then also tell us about your blog for the haunted houses again.
It is nestinmarin.com.
Perfect. Okay, I've never done blogging before, so I figured it's something different. Okay.
It's easy to start. The hard part about blogging is doing it consistently.
Exactly.
And so I've stopped and started and stopped and started. It is hard. If you don't do it at least monthly, it's almost worse to have a blog where your last post was in August of 2009.
Well, you just have to hire a ghost blogger.
There you go.
There you
There
go.
are
There's
services that will
There
do
are.
that. Yeah, there are media services that will do your Facebook posts, your LinkedIn. They'll blog for you. Of course, they kind of have to have an idea of what you do.
Yeah, that would help just a bit, wouldn't it?
At the end of the day, I still think I'm the best person to blog about my company.
Sure.
But there's only so many hours in the day, and we're all so busy nowadays.
And how long does a blog have to be? I mean,
Not long at
Couple
all.
paragraphs.
And actually, what people are really looking for, they want to see visuals. They love pictures. So sometimes it's not so much the written content, but what you're also showing them picture-wise.
Well, is the information of value? That's really that you give information of value. Concise is always better. I'm not going to read a 7 or 8 paragraph blog, but I might read a 2 or 3 paragraph short paragraphs that give real good information or a link to a really interesting article.
Exactly.
Mark, we got an email here that someone who's been listening to the show for a while says, if I invest in your new fund, do I start earning that 8.5% interest rate that you've been talking about on previous shows? Do I earn that right away?
So my company is Pacific Private Money, which you can find on the web at pacificprivatemoney.com, and we have a mortgage pool fund which is open to accredited investors, and that fund is paying. It's targeted to pay annualized yields of between 8 and 9%. It fluctuates quarterly based on the income of the fund. And so the way people participate is they basically invest $50,000 the minimum buy-in as a shareholder of this mortgage pool fund. The question was, does their money begin earning interest right away? Well, technically no, but for all intents and purposes, it does very, very quickly. So if you know anything about mortgage investing or private lending, or if you participated in private lending before, maybe you've made a loan on an individual note where you funded that loan through the title company using your savings, and you got a recorded deed of trust as security. And the day you fund that loan is the day you start earning interest on that when you invest in an individual note. When you invest in a mortgage pool fund, there's a lot of great benefits that a fund has, in my opinion, over an individual note. But one of the things that typically does not happen is when you write your investment to the fund, it usually goes into a subscriber account first, where it sits until the fund is ready to loan that money out. Because you don't want to dilute the fund by having all this cash in there that's not earning any money. That's not fair to the other shareholders who may have invested before you. So,
but how long does that money sit there?
well, and that's the whole key. It usually sits there for anywhere from a couple of days to maybe 2 weeks. So it's really not that long. So one of the benefits of investing in a fund is your money goes to work for you very quickly, but not necessarily immediately. But oftentimes it might go to work for you more quickly than an individual note. Because one of the nuances of finding an individual note is finding one that somebody else hasn't already committed to first. So there's a lot of competition for these individual notes out there today that didn't exist a couple of years ago. And so a lot of people are now turning toward the mortgage pool fund option to put their money to work right away.
But once they put the money in and then it gets transferred in this 2 days to 2 week period, it stays in the fund.
Once it goes into the operating account and is used to fund a loan, even if that loan pays back, you don't give back. You don't put the money back in the subscriber account.
Yeah.
In other words, once your money is activated, so to speak, you are now a shareholder. You are earning your pro rata share of the fund yields.
Okay. Now it's in previous shows you anticipated you were going to be paying 8.5%.
Yes.
How's that been
Well,
performing?
we just did our third quarter distribution, and the shareholders all got payments equal to an annualized rate of 8.9%. So
Which is higher than 8.5.
a little bit.
A little
And
bit.
in
So
fact, those that didn't take their distributions and reinvested their dividends, they'll, assuming we have similar activity in the future quarters, they would receive actually more than a 9% return on their funds. So for a passive mortgage pool-based investment, we think our fund has got some great features, some great safety and security features, and the yield is just phenomenal. I mean, where else are you going to find 8% or more on your money that's secured by Bay Area real estate?
And what's the loan to value average?
The weighted average loan to value as of the end of last quarter was 53%.
Imagine that, Julie. 53% loan to value.
That's
and he's
pretty
still
amazing.
Producing over 8.5% returns. Sounds good. In fact, so good that I put some of my IRA money in. So of course.
And we thank you for that.
Yeah, you're very welcome. So I've got my third quarter distribution. Mark, how do people get a hold of you if they're interested in knowing more about this?
So you can call our Bay Area office or visit our website. But if you want to call and get more information, in fact, you can call over the weekend, leave a message, and you'll get a return call next week. Our number is 415-888-8255. 883-2150. That's 415-883-2150. And our website is pacificprivatemoney.com.
All right, we're going to cut to our second commercial break, and here is the trivia question. Again, the theme is prison movies. Adam Sandler played Paul Crewe in the remake of The Longest Yard. Who played the same role in the original 1974 movie? And by the way, he had a cameo appearance in the remake of it, excuse me. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Adam Sandler played Paul Crewe in the remake of The Longest Yard. Who played the same role in the original 1974 movie? Call 888-912-1190. Make sure to include your name, your email address. Speak slowly, spell out your email one letter at a time. Don't touch that dial because the best of investing will be right back.
I don't.
Don't know the answer to that one? Do you know, Mark?
Burt
Reynolds.
That's correct.
Couldn't remember his last name. See, he's been out of the picture so long. Whatever happened to
Yeah.
Burt Reynolds? Why is he not?
Yeah, is he still alive?
Yeah, he's still, yeah.
Oh no, I know he's still alive.
Oh, I just
Yeah.
But
asked.
the last film I saw him in that was noteworthy was that one about the porn industry, which is actually a good movie
Oh, yeah, that was a good movie.
with Mark Wahlberg.
What was that called?
Boogie Nights.
Yeah.
I
Yeah,
didn't see
he
that.
was
That was great.
great in Boogie Nights.
He's a good actor. You know,
He was the guy. He was the
Man.
sex symbol
You
back
bet.
in the 70s. Yeah. He was.
He didn't do anything for you?
No.
Really?
No.
I'm not gay. He did something for me.
No, it's more than Robert Redford.
Really?
Yeah.
I used to know his personal trainer. It's funny, Robert Redford, he just, to me, he's so bland.
It was like Sean Connery, and then now I've
Oh,
got
yeah.
one of my private lenders' email address is I think his name is also it's James, but it's James@SeanConnery.com. So how did you get that? He's Sean's my friend. I'm one of the only people he's allowed to have
That's right.
his URL email address. So
Cool.
we always call him. Oh, send it to Sean Connery.
Yeah, exactly. No, my latest is my latest. I guess you call it a guy crush without it being without being gay, right? Is Chris Hemsworth, Thor.
I've missed that too. I
I
better
watched
catch up.
You haven't seen it?
Gerard.
You haven't seen? The guy is like
Buff.
buff, but not steroid buff. You
Yeah.
know, which is kind of ridiculous. No, he's just good looking, good actor. Good. Yeah, you got to see like
Okay.
the
Putting it on my
see the
list.
movie. Yeah, see the movie.
What do we got for next
Okay.
one? We can talk
Okay, I've got a couple of articles to kind of cover.
Okay.
Fun things. Okay, great. Welcome back to The Best of Investing. I'm Edward Brown, your host, along with Mark Hahn and Julie Kennedy. When we cut to the second commercial break, we asked this trivia question again. The theme is prison movies. Adam Sandler played Paul Crewe in the remake of The Longest Yard. Who played the same role in the original 1974 movie and had a cameo appearance in that remake?
That would be the 1970s stud Burt Reynolds.
That is correct. And if you remember the original movie, it's really funny. He takes this expensive Ferrari of his girlfriend, and when he's being chased by the cops, he decides to get out of the car, but he puts it in drive, puts a block on it or something, and it just goes off a bridge into the water. And when the cops finally catch up to him, they say, why'd you do that? He goes, I couldn't find a car wash. I love that one. Okay. So, which, by the way, Adam Sandler did a pretty decent job, I gotta say.
Yes, he did.
He really did. So, I'm looking in the paper a couple of days ago, and I see this title. It says, 3 inches snag remodeling plan in red tape. What's going on there? County planners say their hands were tied by inflexible rules because this one gentleman, his project intruded on a side yard setback regulation by 3 inches. It didn't matter that the neighbors supported his plan, and what he wanted to do was build a second-story master bedroom and work that was already underway following a building permit issued a year ago. Can you imagine?
That is so typical of some cities. What city is that?
That was in somewhere in San Rafael, I think.
God, if you said Nevada, I would totally believe it because passionate about it necessarily. I think they have the same syndrome as most small cities in that their building departments just seem to be extremely inflexible when it comes to enforcement of regulation.
Well, it says Marin. It doesn't really say San Rafael.
Yeah, it's just there's a lot of inflexibility. Boy, that poor guy.
I mean, it's one thing if the neighbors, complained and all that, because their height, the height restrictions or something.
Yep.
So I found one other article here. It talked about baby boomers and investment fraud research findings. They talk about the typical fraud victim is not who you might think. They are financially knowledgeable. Okay, the victims scored higher in financial literacy tests than non-victims. So I guess you go to like the Bernie Madoff victims, and some of those people were actually pretty intelligent. They're college educated, have an average, above average income, and are self-reliant when it comes to making decisions. Now, majority of the older investors do not perceive themselves as vulnerable, and yet many of them reported investment behaviors that put them at risk. I guess maybe
I absolutely believe that, and here's why. I mean, there's certain scams that you hear about that people or older folks or retirees are victims of them. But then there's these scams that I bet are that baby boomers or younger people might be victims of, and those again, this is just me guessing out loud here, that there's a lot of these scams that promise extremely high rates of return.
Yep.
So, for example, we just talked about our mortgage pool fund at Pacific Private Money can pay 8.5%, and if you've participated in private lending in prior years, you know that you can make 10, 11, 12%. So double-digit returns are not unheard of in real estate lending. But I know people out there telling me, I like to make 20 or 25 or 30%, and I'm always seeing stuff in the email that are promising 100% guaranteed double your money. Just put in money. All I need is your money in a bank account for 30 days. It'll be secured. It'll be insured, and I will pay you back 100%.
Where do I sign up? That sounds really good.
And it's so tempting, and I think people fall prey, and they fall prey because of desperation. And certainly, what happened to a lot of people's net worth and portfolios in 2006, 7, 8, where particularly if you were real estate heavy. I mean, a lot of people went bankrupt. I mean, you could have had a 7-figure or even an 8-figure real estate net-based net worth portfolio going into 2006, and by 2009, you could be bankrupt 5 times over, or even have a negative net worth, and just.
Well, a lot of the people that fell victim to that were real estate professionals.
Well,
We're talking
absolutely.
Mortgage brokers, realtors,
Right.
and then this poor couple in Marin who got scammed by Blessed and Marvelous.
Oh yeah, that's right. I read
Blessed
about that. The guy's
Marvelous.
name was Blessed Marvelous. He came from the Congo, right?
Well,
Or
and
he
he
says
claimed
he
to be
claimed.
the son of,
Which reminds me, everyone hears about, was it called the 519 scam or something? The Nigerian,
Yeah, look at those,
email
right.
stuff. And what I had heard is not as much the fact that in the email they ask you for all your personal information.
Right.
They start off really slow, and you give them just a little bit.
Make it easy.
Yeah, and then the whole idea is, okay, you're finally at the final thing. You invest all this time, and then it's now all you have to do is just because of blah 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 blah. You have to fly to Nairobi, or no, that's Kenya. What's in Nigeria? Anyway, you have to fly to Nigeria. Thing is, once you get there, there's a gun at your head, and there's a ransom note. It's ridiculous.
Right, but for those people that really did lose, all or a substantial portion of their net worth in the turn of the market, there's this anxiety to try to catch up, right? And so so you turn to these high percentage, and there are people that do double their money. I mean, in fact, you can lend very aggressively by doing seconds to guys who are buying, fixing, and flipping, provide that what they call the gap financing.
Sure.
It'd be a second behind a first, and often I know guys who are doing it regularly and are earning on average 20 to 25% annualized return on their money. But it's risky. I mean, if the market turns or the rehabber doesn't do a good job, you might have to take over the project. So you can do those, but it's just it is that goal of trying to make back what you lost. It's
Well, there's a time.
it tickles the greed factor, and that's the problem.
But it's also the time value of money. You know, if they make 20 or 25%, but they were expecting to do it in 3 months, but it's taking a year because the market's changed. Let's say it hasn't really gone down in value; it's just taking longer to sell a house.
You know, there are guys that I have one client who he only makes seconds, and he only does the gap financing behind, say, a 70% first position purchase loan, and he's been fairly successful. But he has to work pretty hard at this. He's been fairly successful at sticking to his goal of making 25% on his money every 6 months. So then again, of course, he'd be making a 50% annualized return if everything goes well. But he makes 6-month loans, and generally he's paid back within that 6 months because they buy it, remodel it. He funds light remodels, and so there is that. And in fact, there's an organization in the Bay Area that actually teaches people how to do seconds. And so there's this cottage industry out there of people, and these people call me all the time because they know at Pacific we make firsts. We don't generally make seconds, and they say, hey, if you have a particularly good borrower client, rehabber client who needs additional financing above and beyond the money that you guys provide, let me know, hook me up with that guy, and maybe we can work out a deal. And those are people that are in the business of making, trying to make, 25 to 50% annualized yield on their money, but it doesn't come without risk. You have to be very, very actively involved in each individual project when you do that.
Yeah, that would be my question: is the kind of research that individual would have to do to ensure that it's a marketable resale property and that you've got a reputable person doing the work.
Well, and if you're doing the first, it's 65% loan to value, generally.
65 or 70. We'll do a 70% of purchase price first position loan, and then the guys who are doing seconds will do anything from just coming in with the 30% behind the first, so it's 100% of the purchase price.
Yeah.
And then the borrower would come in with the remainder for the remodel, and that costs a certain amount. But then there's also people who will provide all of the money and do basically 100% financing. But the higher percentage you borrow, it's really it's a joint venture. You're really splitting the profits, or maybe even more. It might be a 60-40 split in favor of the lender. So there's a lot of creative people out there with money who are trying to put it to work in this real estate environment. And again, it's not worth risk, and it's not for the faint of heart. But these are guys that usually understand how remodeling works. They may be even contractors or rehabbers or flippers themselves who have made a bunch of money, and now rather than do the dirty work, they'll back the winning horse, so to speak. They'll look for someone who's really good at what they do and provide them with the capital to maybe do 1 or 2 additional projects at the same time, and which oftentimes works. Sometimes it doesn't.
Yeah, I mean, I could see where, from your standpoint, it's not super risky if you're 65% loan to value.
Oh, my loan is well secured.
Yeah.
I've got an additional guarantor.
Exactly, because the guy who's putting in the money for the second, even though it's, quote, 100% financing, he's probably fairly sophisticated, and he's not going to walk away from his 35% that he's put in. He'll take over the project, won't he?
Yeah.
Generally speaking?
Generally speaking, you're right. So I don't mind when there's a second behind my first, because I feel like that person who's lending the secondary money to my borrower basically behaves like an additional guarantor, because again, he's not going to let me foreclose my loan on the property, and he's going to lose his investment. So anyway, it's interesting. So again, but hey, buyer beware, and watch out for the too good to be true.
And investor beware.
Investor beware today.
Okay, we're going to cut to our third and final commercial break, and before we do, next week we're going to have another special trivia contest. This one's going to be for the Hyatt Regency in San Francisco. And it is the city's only luxury waterfront hotel featuring the Guinness Book of World Records largest atrium. You guys ever been to the Hyatt Regency in San Francisco? That thing is huge. It is a beautiful atrium. And in fact, I love during Christmas time, they usually have it all decked out. It's just awesome. The hotel is convenient to all of San Francisco's greatest attractions, including the ferry building, California cable car line, Bay Bridge lights, and scenic waterfront. Check them out at sanfranciscoregency.hyatt.com. Okay, here is our third and final trivia question. Again, the theme is prison movies. What was the name of the 1999 movie that starred Tom Hanks as the supervisor of the prison's death row cell block? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Check them out. Call 888-912-1190. That's 888-912-1190 to answer this question. What was the name of the 1999 movie that starred Tom Hanks, again we're talking prison movies, as the supervisor of the prison's death row cell block? Make sure to include your name, your email address, speak slowly, spell out your email one letter at a time. Don't touch that dial, because when the Best of Investing comes back, right back, we're going to have some more interesting comments, and then we'll have some closing thoughts for the day.
All right, we're going over. I really need to jam. Are you guys okay? It's probably a short segment for the last one anyway. I think we ran long on 2 and 3, so I apologize, but I'm going to be more than stressed as it is because I'm running behind. So
Gotta catch mine. Julie and I will cover you.
thanks, you guys.
Sure.
All right.
Yeah.
Well,
Have a good trip.
thanks. All
Make
right.
lots of money.
I will.
Remember?
There, my friend.
All right. You know the answer to this one?
I can envision his co-star, the black actor.
Yeah.
And
He just died recently, unfortunately.
Yeah, that was a great film.
Do you remember that movie, Mr. Kramer?
But I can't remember.
Green Mile.
Yes, The Green Mile.
I knew all of those.
Because you just love prison movies because you used to live in San Quentin. He did. He lived in San Quentin.
On the grounds there.
But not the city, not
Yeah.
the prison.
Yeah.
I guess
As you go, County.
That's
You might be familiar with it.
I am. Yeah, I know.
It's
Interesting properties there.
Okay. What do you want to cover in the last? Let me just see how much we have left here. Okay. Got, yeah, we only have 6 minutes and 55 seconds.
Okay, well, we could talk about this affordability
Oh yes.
factor.
That's right. We didn't talk about that.
Let
Oh,
me just find that one. Spinning headlines. San Francisco, the least affordable or most desirable city?
I'll let you answer the trivia question. Here we go. Ready? Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hoff, president of Pacific Private Money, California's fastest growing private lender, and Julie Kennedy of Marin Modern Real Estate. When we cut to the third and final commercial break, again, the theme is prison movies. We asked this trivia question: what was the name of the 1999 movie that starred Tom Hanks as the supervisor of the prison's death row cell block? Julie, you know the answer to that one.
The Green Mile?
The Green Mile, yes. And unfortunately, Michael, I can't remember his name, the huge black guy who
Such a great
he was
actor.
great. He was great.
Yeah.
He was great.
It was
Loved him in some
very
movies.
moving film.
Yeah. Unfortunately, he passed on just recently. Now, you want to talk to us about affordability. Go ahead.
Well, there was an interesting article in the Atlantic magazine recently about which areas have really recovered from the extreme economic real estate downturn. And one of the factors that this article looked at was median home pricing and median income. And I picked up another article on the internet that also brought this issue up and how it relates to San Francisco. And the title of his blog is San Francisco the least affordable or most desirable city? And
Both.
yeah, well, it is both. And what's so interesting is, and I'm a native San Franciscan, and I'm very aware that the city sits on a peninsula, and there's no place to go for building, and the density building factor in San Francisco is very low. That was something that happened way back in the 60s or 70s to preserve the character of San Francisco, the city that everybody wants to live in. But yet, we don't have the infill that, say, other cities like Seattle might have because they have different codes for their density.
So they have high rises, but that's more condos.
Right,
than it would
right.
be. You're talking about for single family dwellings.
Right, and
Okay.
any new building starts, for example. So, we've seen like the China Basin area. We've seen like a lot of newer buildings, but again, there's a little bit of a building boom going on in San Francisco right now, but once that cycles through, there aren't a lot of projects happening.
Well, is it houses being torn down because there's not much land available?
No, it's just, infill in different areas. So the gentrification, maybe it is where sites have formed in industrial areas where those buildings come down, and so new projects are going up. Residential condos, townhouses, so the denser. But obviously, in terms of single family, there really isn't any new single family development anywhere in San Francisco.
Not development.
I think Diamond Heights, which was built back in the '60s, is probably one of the last new building projects of single family homes in San Francisco.
And I understand some people are digging deeper down to build a garage because
Yes.
you can't build up.
Exactly.
I don't know how expensive that gets.
Very.
Yeah.
Because you also then have to factor in earthquake,
The
safety
retrofit.
and all of that. So
You do something with the dirt.
Yeah. It gets very expensive.
Wow.
So, I'm curious with listeners, knowing that San Francisco, because it is one of the most expensive cities to live in, and the ratio of median price to median income way outstrips, for example, a place like Akron, Ohio.
Yeah.
What do people have to sacrifice or give up just to pay for shelter? Whether it be
The weather's got to be one of them.
yes,
Right?
absolutely.
The weather's going to be a lot better here than Akron.
Well, better, but we also have a foggy climate, so it's
Well,
not.
that's true.
So for some folks, the weather is, one of the least attractive things about pockets
Yeah,
of the city.
but you save $20 by not having to buy a snow shovel.
Well, exactly. And you say to yourself when you get up in the morning, well, do I need a sweater or a jacket today? So it's a monoclimate, and it's very predictable, and it's a gentle climate. But I know that I work with a lot of relocation clients. I work with a lot of first-time home buyers, and I marvel at, particularly the first-time home buyers. Not only their mortgage payments, if they're only putting 20% down, but then their taxes are based on. I bought my first house for $68,000. My taxes were pretty but my taxes were pretty low.
Sure.
Now, these folks are paying as much annually for property taxes as
they used to
as
be
I
for-
paid for my whole mortgage.
Yeah.
So it's tough to see. On the other hand, this is one of the most beautiful places in the world.
Sure.
And getting over the weather part of it, there's other parts of the Bay Area that are also climate.
Well, and it's not just the percentage on the real estate taxes, it's all the crazy special assessments. Mosquito abatement,
Right.
police this, fire this, crime this,
Although I know.
send the president on vacation,
Well, it's also school bonds.
Yeah, that's a big thing too.
And
sure.
I have to say that one of the attractions to a lot of the suburban communities around San Francisco are their excellent schools.
Okay.
And those schools are funded by school bonds. So I would venture to say that that's probably your biggest add-on on your property tax.
Great. Thanks again. Give us your website one more time.
Sure, it's nestinmarin.com.
Okay, check out Julie Kennedy there. And thoughts for the day. Milton Berle said, they finally come up with the perfect office computer. If it makes mistakes, it blames another computer. I like that. And when people ask me if I have spare change, I tell them I have it at home in my spare wallet. Tune in next week to The Best of Investing. We're going to be giving away 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown, wishing you the best of investing. So long. Good. That's a good show.
Well, those last few minutes.